Hi everyone, I'm super excited to host Jameson Hartman, Vice President of RET Ventures. Thanks a lot for being on the show.
Yeah, thanks for having me. Appreciate it. Excited to chat about all things construction tech, prop tech, real estate tech, etc.
So, Jameson, take us back to your teenage days till this date. What would be your top three career highlights?
Teenage to today. Probably number one is, I was fortunate and lucky. I tripped into investment banking at Goldman Sachs. I think nowadays, I feel like anybody who wants to do investment banking, they have to start when they're in middle school to get an interview. So I was fortunate. That's a highlight where I don't think I would be able to accomplish that now. Being in that environment, working in New York, working on big mergers. I think Liberty Property Trust was acquired by Prologis. That was one big transaction I worked on. So that kind of helped set the stage for probably some of the technical analysis that I do in my current role. And then honestly, similarly, like kind of tripped into coming back to Utah. I'm from Utah. Our fund is based in Utah. So I was in New York and kind of timed it, got lucky, and venture was not really on my, I'll call it, career map. I think it was just an opportunity that presented itself. And I found it kind of interesting, explored it further, and I was fortunate enough to land where I am today with RET Ventures. So those are probably like the top two-ish three from a career standpoint. And then generally, right, in venture, you get to work with a lot of cool CEOs. You get a lot to see a lot of cool companies. I think that's very unique. And in both jobs, there's a lot of diversity with like the type of work, the projects that you're working on. So those are something I think value looking back on.
Yeah. And for people who don't know about much about RET Ventures, can you share a bit about background and how it
Yeah, the
operates?
the 10,000-foot kind of elevator pitch on who we are as a fund. Yeah, so we're a strategic fund. So what that means is, all of our money comes from investors, financial institutions, real estate institutions that have some angle into the companies that we might be investing in, right? So, for example, we have several REITs in our fund. That's UDR, Six, Mid America, Center Space. So those institutions have invested, given us capital, and we go and we find solutions that they themselves can adopt at their properties, at their organizations. So it's a very virtuous cycle. So that's who we are as a strategic fund. We typically tell founders and investors that our sweet spot is Series A. So a company that has, good product market fit, has customer references, is growing, but isn't also, at $10 million of revenue, right? We want somewhere in the kind of $1 to $3 million range. And, we write sizable checks and own, anywhere on average close to 20% of the portfolio companies we invest in. It's yeah, that's the high level. And there's, I think, 10 of us in Park City. And yeah,
Jameson, can you share how a week in your life look like?
a week in my life at RET Ventures, I'd probably say there's three silos. There's probably silo one is supporting our existing portfolio companies. We have around 50 portfolio companies. We have investment team members that, are responsible for the reporting, helping them with sales, reviewing materials, whatever it might be, right? It's kind of, you can think of, sometimes we are almost like the chief of staff role for some of these CEOs just to help with anything and everything. It's probably like one third. The other one third would be finding new portfolio companies, talking to new founders, hearing their ideas, hearing their pitches, doing diligence, right? Is it a fit for us? Is it a fit for our LPs? Are we a fit for them, right? Sometimes you know, we might not be the right match for a founder. And the final third is actually coordinating with our LPs, right? A big piece of our investment due diligence is, oh, you're creating a new startup. Great. What's the idea? You hear the idea. Okay, great. You have a customer deck I can share with my LPs. I go to the LPs. I hear their feedback. Is this a pain point? Is this real? Are they thinking about it the right way? So it's kind of like a little bit, it's like free market research, and in general, we think that, you know, corporate VC, right? They might go to their marketing team for feedback on a product. One marketing team, right? We can go to 50 marketing teams, right? Does that mean like we can control them and they will use every product we invest in? No, but we'd like to think that we have a pretty good kind of wisdom of the crowds approach to our investments. So those are the kind of three things that I think our investment team is doing every week, is some combination of those three. Some weeks it's more diligence, some weeks it's more LP conversations, some weeks it's more, investor reporting on our portfolio companies.
Has the AI vibe coding bubble increase the deal flow and the due diligence has become more difficult?
Just like with all AI, kind of the macro environment of AI, it's tough. Obviously, it means that there's more companies, right? Because, anybody can vibe code something nowadays. So, like, I think the top of the funnel, has widened, right? There's just more, companies coming to market a lot quicker than they otherwise would. It does make it difficult for us. I do think where we sit at the Series A stage is a little bit more, I'll call it protected, insulated from that kind of AI bubble dynamic because we really do rely on customer feedback. So, the top of the funnel, there's lots and lots of companies, but a big majority of them are probably going to drop off as soon as they deploy with a customer because there's integration work, there's customer service, right? There's things that maybe like AI has a harder time doing or aiding. And, the cream rises to the top, right? So then it goes from 100% to 20%. And that's when we start looking at them. It really hasn't changed a bunch. I do think, though, maybe the diligence piece of, your competitive moat has gotten more difficult, right? Like if somebody comes to us, they have customers, the customers like them, but it's a resident app, right? How competitive is that moat? Like, are they going to really protect themselves in the future if somebody else comes along, vibe codes an even slicker app and figures out integrations, figures out customer support? So that part I think is difficult, is how sticky and entrenched is that moat. But we really heavily rely on our LPs, right? If they really love the product, a lot of people, even if you come to them with a better app, there's switching costs, right? You have certain
Mm.
workflows with that app, right? Like there's probably a better app than Excel, but I still use Excel because I'm just so used to it. And like, everything that upgrades needs to integrate with Excel. I'm probably never going to throw away Excel. Never say never, but we'll see.
From RET's perspective, what problems are you most focused on seeing technology solve for real estate owners and operators today?
Yeah, I think the top of mind thing today is kind of this, I'll call it seamless workflow. You can kind of think of, and everyone uses the, Uber for this, Robinhood for that, right? So I'll use Robinhood, example of investing and trading stocks 15, 20 years ago, right? Difficult to open up an account, difficult to connect your bank, you had to sign this, you might have to sign paper forms, right? Just a lot of friction points, right? Just for you to invest $100, right? Robinhood, I'm sure you can do that in 5 minutes nowadays, right? Or less. I think the vision in real estate with rentals specifically, because, a big portion of our investors own multifamily, is streamlining this, prospect to lease to renter workflow, right? You go online. How can we quickly get you the apartment that is the perfect fit for you? How do we quickly, validate that you can afford the apartment? How do we quickly get you signed up for the utilities, Wi-Fi, blah, 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 that you feel like it's just like Robinhood, right? Changing apartments is not a headache. Getting a new apartment is not a headache. You didn't have to go and scan your passport and mail, a 70-page lease document. So I think that's the vision. So a lot of technology solutions that kind of integrate and just make that entire resident life cycle more seamless. That's really where we're looking because that enhances the conversion rate of prospects. It enhances the resident experience. So that's probably the vision that we're most focused on today.
God. And where in the life cycle do you see most adoption and impact in the early?
In like real estate world, like
Mhm.
with like if you were asking me, hey, I want to create a new startup, like where do you think I'll have the most amount of like value delivered for owner operators? It's tough. I mean, I think the opportunity for the most disruption is obviously going to be earlier, right? The construction side. I think that's why you do see a lot of like construction tech companies do raise a lot of money because it is this like binary outcome, right? You're a crazy success or people just don't adopt you and you burn millions of dollars and you become, one of the many graveyard companies of like modular housing, right? Or modular building. I'll say value or opportunity is. And for me, I think biggest opportunity of disruption, early stage construction, going after the Procores of the world, right? The modular building, right? Can we change the way houses are made, right? Like there's a lot of money and a lot of value there just in terms of, the actual cost, right? Costs, over $500,000 to build a home nowadays. So if you can figure out a more efficient way, you can save a lot of money for that single home. And, there's thousands of homes being built right? Tough part is it's very binary, high risk, high reward. There's a graveyard of companies that have been game changing that quite haven't made it, right? And so while I think it's the opportunity to be the most disruptive, I'd probably say like the probability adjusted like value would probably be changing something with operations, right? If you can, I think a perfect example is with one of our companies, our LPs, our investors, UDR, had quoted, hey, if we can take turn time, like resident moves out, we clean, we paint, fix carpet, new resident moves in. If we can take that from an average of 5 days to an average of 3 days, right? Several $1 million per year to the company, right? They themselves, like a several $1 million software contract is unheard of, right? And so if you are a company that could figure out how to do that and help them, they're very likely to somehow share that value that they've realized. So I think the applicability across the entire portfolio probably behooves founders to go toward the operations because your hit rate and your success rate is slightly higher. And it's also something we discuss at RET is kind of like incremental improvement. I think you hear this a lot, like in kind of the world is, you don't have to reinvent the wheel, right? You just have to make it slightly more efficient. And so it's easier to do so, I think, on operations than it is with building. There are examples in the building space, which I can talk to, but I'd probably say transformative building, early stage, and then just probability adjusted ongoing operations.
An area you find oversaturated where there are so many solutions.
Ooh, oversaturated. I mean, I think you'll probably start to see, this commodity layer of like smart AI chatbots and, items like that, right? Oh, a leasing assistant, this. Yeah. It makes it very difficult, right? Like, I think a big question for, people in my seat that are strategic investors, right? We invest in real estate is, hey, you have a generalist solution, right? You have a Gemini, a ChatGPT, you have these just broad industry agnostic tools. Why would the industry specific example win, when the industry specific leasing chatbot, when in theory, could you build that with Claude, right? Could you have a more agnostic? So I don't want to say it's saturated. I just think that it's becoming more commoditized, and thus then it becomes more saturated because you have a lot of players that can enter the market.
If you were advising early stage construction or PropTech founders, what topics you would cover and teach?
I think obviously like one, just being like it's kind of a no-brainer, but being very organized with all of your data, right? Organized with your KPIs, organized with, hey, we signed this customer, we knew like what is your pitch, right? If your pitch is that you get them to sign more leases, well, have the data on how many leases they signed before, right? Have the case studies. Have all of that very clean. Have your, revenue by customer very cleanly broken out so that when you go to raise, it's kind of all there. I think that immediately gives you kind of like the gold star of, oh, okay, you're organized and you're on top of it. I think a lot of founders are so focused on the customer, which is not a bad thing, right? You should be focused on the customer, that they forget about kind of the long-term things that they should have ready and available. So if they do need to raise capital. So that's more from like the investor side of things. That would be just number one. Seems relatively obvious. I think number two, in terms of, if I were to say, our portfolio companies that are successful are very good at like winning the boots on the ground. So I'm selling to you, you're the CEO of a company. You might love my products, but if the actual users don't love my products, it's, going to have a lot of uphill, battles to get adoption, right? So the goal would be figure out who the user is, who the technology decision maker is, not so much the corporate decision maker, maybe, and just make sure that they like the product and it actually makes their life easier, right? Like we have all the time companies that would save owners lots of money, but the owner is not the decision maker. It's the boots on the ground worker, and the boots on the ground worker, it makes their life more difficult. So they just put up an immediate roadblock. And, you can have a lot of different ways to get that, right? You can say like I use Excel, right? So if somebody sells me on something, I want to still use Excel and I just want to make my use of Excel more efficient. So if you can prove to me that it's just a slight incremental upgrade to Excel, I'm way more likely to adopt it versus throw out Excel and here's something better. Because even if you're right, I'm going to hold back probably because, inertia is real. People don't like change.
Can you share, like, from your experience in working with these founders, what's a GTM playbook that's working well in construction and real estate?
Yeah, the go to market. I think one, tangible, like a validated case study, right? Like I can tell you, we have a company, for example, it's called Our Pet Policy, right? So it screens for fraudulent emotional support animal like certificates, right? So all of us millennials, we just have to have a dog and we're willing to, pay that Instagram ad to get an emotional support animal certificate, right? So they were very good at just coming in and saying, "Hey, we'll do an audit. Show us all of your emotional support animal certificates from the past, year, and we'll show you which ones are fraudulent." Right? Boom. Very easy, very clear. There's the value, right? They don't go, "Hey, we're gonna enhance the quality of life of your residents." Right? Your residents will like living at your property more because that's very squishy. And so, whatever it is, like in terms of go to market, is make sure that it's tough to refute whatever your value pitch is, right? If your pitch is the quality of life angle, then have a very clean, hey, rents grew at the properties we've been at. They grew at, 50 bips more than the market, right? Whatever it might be. So you just want people to trust the data and that's probably the number one. And then number two would be win the boots on the ground, make their life, incremental changes. Don't change the way they do things, just make it more efficient. If you can kind of do those two, I think you win the owner with the value prop being very clear. And then you win the boots on the ground with like, I'm here to make your life easier, right? I'm not here to tell you you have to use another login, I'm not Copilot or Teams like trying to force myself onto you and you don't want me to, you don't want to use me.
For the founders you worked with, any expensive mistakes or failure stories which we could learn from?
I mean, it's expensive mistakes. If there are, I probably wasn't told or it was probably, hid into the broader budget. But I do know I can like that the purview that I have a lot of the time is like sales, right? So, we help connect our investors with our portfolio companies, right? They have a problem. We say, oh, you should talk to this company or really any company, right? Our goal is just to be a resource to our investors. Often companies will overreach what they can or think they can do to get in front of customers. And I've never seen it work where it's like, sure, you get the demo, sure, you get the pilot. But if you're pitching something that you're actually not going to succeed at executing on, you're now losing that lead forever. Versus if you would have just talked to them, given them advice, and said, oh, well, we actually today don't do X, Y, and Z, but, happy to be helpful strategically, right? Happy to give you advice, whatever. Those customers are much more likely to then come back to you at a later date, right? Like there's the kind of long run, short term mindset. And I think more often than not, founders that have more of a sales lens want to be a little bit more short term, like, hey, we'll lock them in, right? If they do a pilot with us, they'll have to sign the contract because, they're gonna have this regret that they spent all this time, so they'll just go forward, right? That to me, I think is a big like road you don't want to go down.
Being clear, setting the boundaries.
Yeah, yeah, and just being honest
Right.
about what you can and can't do, right? And like you can say, hey, that's on our roadmap, and hey, we'd love for you to be a development partner, right? Like help us build this, but like don't tell them that you have it or don't tell them that you will have it if you truly want.
And for bootstrap founder, are there any tips where if have resources constrained, how can they get enterprise clients?
Yeah. Oh, that's tough. I mean, I think if you are resource constrained, right, and like you're pitching to an enterprise kind of like obviously it is a little tough. I mean, it's kind of like the financial mantra of well, your margins might just be like kind of worse, right? You might be selling something for $1 and it's going to cost you 99 cents instead of 80 cents because you do unfortunately probably have to, find those resources, right? You might even sell something for $1 that costs you $1.05 with the hope that, as you scale up, you'll be able to negotiate and, get your costs down. So I don't necessarily have a very specific like, oh yeah, you can do XYZ and save money. I think it's just, in theory, you might for the short term have to, and investors, we wouldn't hurt people if you can explain the story, right? Like we're okay if somebody's margins are at 20% and they start creeping their way up and 30, 40, 50, 60, and they work their way up because they got the client and the client's happy, right? That's better than saying, oh, well, we refuse any clients below a 60%, contribution margin because it's not worth our time. I'm of the opinion that it's always easy to keep a client happy and then reduce costs later or increase, revenue later than deny a client, they go with something else and then come back after the fact.
Someone listening who wants to be in a position like yours, what advice will you give them? What are the skills they have to learn and develop?
Yeah, I think honestly, I'm probably come from probably the non-traditional route, right? You kind of got your venture capital guys that are finance bros, like more investment banking, private equity, and then you have your operators, right? I'd probably say the hit rate of operator is going to be higher, right? And so I really do think if you're interested in like startups, early stage companies, like join a startup, join an early stage company, right? Make yourself indisposable to the CEO, right? Kind of become the chief of staff, right? Because that's what I said. It's like my role is kind of a bit of a chief of staff role. Become the chief of staff of a startup, right? You'll see a lot. You'll wear a lot of hats, and then maybe you do that once, maybe you do it twice. You'll have a skill set that then you'll immediately be able to bring into see like myself, and you'll actually say, hey, I was this much closer. Jameson has seen a lot of different companies, but he wasn't in the mud like I was. So that would be my personal advice is like join a startup and try and work your way up to a broader position, right? Yes, if you become the head of sales, you could eventually go into VC, but head of sales might not see the technology stuff or see the finance stuff, right? The VP of tech might not see the finance, might not see the sales. So I think a chief of staff role is like the gold standard of kind of being in the weeds and being able to see a lot of different things.
I want to do the rapid fire round before we wrap up the
Yeah.
interview. You will have 5 seconds to answer it, and you got to keep it super short.
Yeah. Yeah. I'm not good at that. Okay. Yep. 5 seconds. I hear you.
Your favorite restaurant,
Mumbai House in Salt Lake.
your role model,
Paul Felstead was my university professor.
3 words your best friend would describe you as,
Motivated, eccentric, and skilled.
a city or country which is in your travel bucket list,
Ooh, India is definitely up there.
your favorite movie,
Favorite movie? About Time. It's a rom-com. It's great.
piece of advice to your 18-year-old self.
Ooh. Complain less, listen more, maybe.
Jamison, anything which we didn't cover in this interview and you would like to share that message on a closing note?
No, well, I think we covered most of it. Obviously, if you have any follow-ups for me or if any of the listeners have follow-ups, happy to be helpful. I'm sure you'll share my details out. But no, this has been great. I appreciate the time. And yeah, that's everything on my end.
Yeah.